Good afternoon, everybody. It is a wonderful afternoon, and I'm really pleased to be moderating this panel where we're going to be focused on emerging markets. This topic is especially relevant as these markets are experiencing rapid growth, shifting risk profiles, and increasing demand for financial resilience. Today, we'll cover several key themes, including regulatory trends, technology and digital access, microinsurance, public-private partnerships, market distribution, and product design. With such an amazing panel, we're really looking forward to a great conversation on the advancement of insurance products and technology, as well as hearing about how insurance plays a vital role in economic development in growing jurisdictions. What we aim to achieve this afternoon is to delve into the opportunities, the challenges, and the innovations reshaping the insurance landscape. This is a topic that is at the forefront of almost every conference we attend, every forum, meeting, and roundtable, because it is ever evolving. And as leaders in this space, and everybody in this room is, we must continue to drive this conversation forward to ensure that we are reaching all consumers and ensuring the resilience of our communities. Now, we're fortunate to have with us this distinguished panel of experts, and I'm very pleased to welcome Ekhosuehi, Mimoza, and Suzette. The first question we're going to open up with is for everyone. How would each of you characterize the current state of the insurance industry in emerging markets, and what trends are gaining the most momentum?
Would you like me to start?
Sure.
Well, thank you. Thank you. I'll just say first and foremost, really thank you to the NAIC for this invitation. It's the first time I'm attending convening like this. And I will also say, it's quite interesting to be invited to have a conversation on what are the experiences from emerging markets and how could they be relevant for more established markets. We don't get that often, so it's refreshing, and I think one that I welcome. So to the question that was asked, I think the first thing that comes to my mind is that emerging markets are quite diverse, right? Burkina Faso is not Indonesia, and it's not Barbados. So it's really important to establish that point as a really important place for departure. The second is obviously they are also affected by many of the global trends that we are seeing, demographic shifts, et cetera, and that influences the sort of innovation, the investments that are being made in terms of the thinking around insurance and developments of these markets. That aside, I will focus on perhaps four things that we are seeing when we talk about this broad group in a sense. The first is coverage is increasing, but insurance penetration still remains very low. That's a fact, right? We often hear the statistic 2 to 3% insurance penetration rates in many emerging developing countries. This persists. We obviously see growth in terms of health and life. We are seeing increasing offerings in terms of weather, climate-related products. But I think another point that is also important to understand with these markets is growing middle class and urbanization, which is also driving demand for more products, if it is health, life, auto, etc. A key, I think, important, relevant development is also the judicial transformation, just drawing on the last panel. We see in certain markets, for example, in Kenya, the use of mobile money, that also creating, I think, opportunities for leveraging those platforms in terms of improving offerings around insurance. And then finally, I would say that what we are also seeing is increased partnerships. So it's not just simply, insurers going into the market and offering products, but the need to actually partner with local actors, partner with other institutions, if it's the development institutions that have a more direct connection with policymakers around the thinking around insurance markets, the development of the ecosystem, and developing the right products to meet those communities. So those are some of my initial reflections on that first question.
Thank you very much.
So first, thank you very much for the invite. I feel very honored to be part of this panel among the distinguished speakers. First of all, I would like to bring some insights from my small country, Albania, a small but rapidly evolving emerging country in the southeastern Europe, which is transitioning from a low insurance penetration environment to one marked by modernization, digitalization, and reform-driven growth. Albania's GDP per capita has tripled in the last decade. The economic growth is at 6%, as per IMF, partly also driven by a boom in tourism industry. The data of 2024, we had around 12 million visitors in Albania. This figure is nearly 5 times our population. The natural and cultural assets have helped Albania to transform into one of Europe's most promising travel destinations. Though the Albanian insurance market remains low, and this has historical background. It began in 1991 after decades of closed economy under the communist system, where everything was state-owned, there was no private property, and consequently, there was no private insurance. Currently, the insurance market is dominated by compulsory motor third-party liability, which accounts for about 68% of the market, with life insurance still underdeveloped, and insurance penetration is low. Ekhosuehi was saying about 23%, but there are also countries below this figure, so around 1% penetration, and capital density of roughly 78 US dollar. Anyhow, our broader vision for insurance market is closely tied to Albania's European future. We are in advanced accession negotiations with the European Union, and currently we are working for the alignment of our legal and regulatory framework with EU directives and regulations. In this context, one of our most strategic reforms as authority in the insurance market is a transition to Solvency II regime, and we aim to build a regulatory environment that protects policyholders and supports sustainable market development. Digital transformation, as previously mentioned, is another priority in the insurance development, with over 97% of households having internet access, and with a strong e-government platform like Albania, where 95% of public services are submitted digitally, there is a sound and solid foundation for expanding digital insurance services. The 2024 OECD Sigma report ranks Albania as a regional leader in the Western Balkan countries in public administration, digital services, and digital public procurement. However, a shift in mindset is also a priority during our work, from viewing insurance as a compliance requirement to seeing it as a tool for household resilience and for economic empowerment. And this is the foundation for a long-term change. Looking at emerging markets more broadly, these regions are increasingly becoming engines of innovation and growth for the insurance sector, in my opinion, though they are very diverse, as also mentioned. We are witnessing how technology is reshaping access, affordability, and inclusion, and particularly the long-faced challenges like low penetration and limited purchasing power have created fertile ground for digital innovation to thrive. So key trends gaining momentum include the rise of insurtech, digital platforms, growing shift toward consumer-centric voluntary insurance products that complement the compulsory lines, so the digital transformation, and tailored solutions that reflect local needs and realities. This is where Albania is heading, and I believe this is a path many emerging countries are now following.
Thank you. Thank you very much for the invitation. Always a pleasure to participate. And good afternoon, everybody. I should have opted to go first because my notes are similar to what they've got. But just to confirm from our side, we're also seeing the state of the insurance sector in emerging markets vary across regions, but also in jurisdictions in various regions. We're seeing growth in the insurance sector, higher growth than what has been seen in the advanced markets, and expecting that to continue in the near future as well. I mean, there might be reasons for the growth because most emerging markets is coming from a low base. Inflationary adjustments did increase premium growth, but we've also seen some initiatives from governments, and if I can give India as an example, where government's got an initiative for known as Insurance for All by 2047, where they're actually deliberately trying to increase insurance penetration in their market. Like both the other two said, penetration rates are low, although increasing and lower than what's seen in advanced economies. But again, there's differences. I mean, in my home country, South Africa, our penetration rate is quite high, and even higher than some of the advanced economies. But it's different in different markets. So what we see, just to say that the IMF's view is financial stability and not development, that's more for the World Bank. But what we see in our FSAPs and in our technical assistance request is a big shift for emerging markets to introduce microinsurance frameworks, thereby being able to offer innovative products like, and she mentioned, index insurance or pay-as-you-go life cover, to customers in different areas in a country through technology, and in many cases through the use of mobile phones. I'll stop here. Thanks, Justin.
No, I mean, the diversity in products is as equal to the diversity in the countries that we're talking about, so that's excellent. Suzette, if you don't mind, I'm going to stick with you.
Sure.
The IMF has published notes on global fintech developments recently. So in what ways can innovation and technology be useful for smaller and other emerging markets?
No, thank you. A very interesting question to answer. So, I mean, it's well known that technology is changing the insurance sector and changing it quite quickly. And I think the speed was increased, particularly during the COVID pandemic. And then it's also as applicable to emerging markets, and I think more prevalent, it's more profound in the emerging markets. Now, the introduction of technology and innovative products can help with lowering certain of the barriers for operating in insurance sectors. And then I want to touch on three in particular. So one is reducing the asymmetric situation of information. So with technology, for example, mobile usage data, satellite photos of agricultural areas, different credit scoring, that can all help insurance companies to be able to better assess risk and more adequately price products. It can also lower transaction costs, as you all well know, and some maybe better than I do, but there's a lot of platforms that's available to digitally collect premiums, like, for example, micro premiums that's collected through mobile phones with mobile money, by issuing policies automatically or by settling claims. And that in particular for emerging markets that's got vast rural areas, the use of mobile phones helps settling and paying claims very quickly through the e-money process that's put on the mobile phones. And then lastly, I think just delivering more tailored products that meets the needs of the consumers because of the ability to be flexible on product, put product quickly to the market, and also put products to those customers that not easily have access to those products. Technology would be able to deliver such. And again, index insurance is a good example, or your pay-as-you-go health cover, or I know in my home country there was a pay-as-you-go funeral cover. So if you've got money and you go to the retailer, you pay for your cover for the next month or the next week or whatever you can afford.
Excellent. Just sticking a little bit with technology, Ekhosuehi, are there specific emerging markets that you believe are really kind of setting the pace out there on innovation?
Yes, I think so. And a little bit again, drawing on Suzette's comments, I think we're seeing most progress in contexts where there's been leveraging of digital infrastructure, regulatory support, but also really leveraging the entrepreneurial ecosystem. And when I say entrepreneurial ecosystem, I'm not just talking about insurers, but I'm talking again about other actors that perhaps exist out of that sphere that are concerned about risks, shocks, etc., and are increasingly trying to design appropriate solutions to meet the particular interests that they might serve. So maybe some of the examples that we're seeing, I think India is a good example, where you do have, just as a basic stat, 800 million people having access to the internet, a very proactive regulatory, I think, environment around digital innovation, financial inclusion, the programs that the government has also implemented to drive solutions for gig workers, rural populations, low-income populations have had really profound impact in terms of improving insurance penetration in that context. But we also see, for example, China, I don't know if that's qualifies, strong integration of insurance with super apps, Ping An also doing some really dynamic work around AI, big data, and telemedicine. I think that that's also something to watch. And then, as I mentioned earlier, we see, for example, in the African context, Kenya, East Africa, leveraging of mobile money like M-Pesa to really scale out and drive the development of these solutions. But beyond that, we're also seeing actors who are trying to reach communities that really historically have not accessed insurance. So I know of a program where ZEPRI, which is a reinsurer in Southern Africa, working with the World Bank and some global insurers to offer drought insurance cover for pastoralists in Eastern and Southern Africa. And this is a profitable endeavor, right? Again, but these are communities that one would historically say, oh, they can't afford insurance, they're inaccessible, etc. But it's really pushing the boundaries, bringing together different actors to try to think about what the solutions could look like. And then maybe I would just say Indonesia, for example, the work that they're doing around insuring public assets. We often talk about, okay, individual microinsurance, etc., but there's also work that sovereigns can do in terms of looking at their assets. How are they encouraging state-owned enterprises to really leverage insurance solutions? We've also seen, for example, in Philippines, the mutual associations who are doing a lot of work around microinsurance and are really developing entities that are profitable. So I would say and I say all of these, or I identify all of these examples, not to say that it is easy, right? But most of them reflect a situation where there is policy clarity, or a position in terms of a desire to deepen insurance penetration. There is a correlation made in terms of financial inclusion. There's leveraging of technology to drive these solutions. There's also a public awareness dimension to that. But they're complex and they take collaboration.
No, that makes a lot of sense. I mean, we never really think about emerging markets and the public sector emerging in that way, so that's excellent. Mimoza, building off of a little bit of what Ekhosuehi said, can you share with us an example of in Albania where tech-enabled distribution significantly improved access or even affordability in your market?
So my country digital transformation mirrors the wave of innovation across countries. Licensed digital wallets and major banks have adopted digital onboarding process, expanding access to insurance through financial platforms. Fintech companies which offer microloans are now also bundling complementary insurance products within their mobile apps. Also the insurance companies, so they have developed online platforms for their products, so where you can buy, so through the online channels, you can compare, purchase, and manage your insurance policy digitally. The largest bank in the country, which holds over 20% of the banking market share, now integrates motor, property insurance, travel, and health insurance directly within its app. And I think the digital apps are very helpful because they have a simple use and they are simple and friendly use, and they also offers trust provided by licensed financial institutions. One of the most transformative developments that I would like to mention in my country has been the launch in 2025 of a fully digital insurance brokerage platform provided by a fintech company based on modern affinity distribution model. So this is an e-money and microfinance fintech company which has joined forces with a global insurance leader and also in partnerships with local insurers. This is a mobile-first solutions which allows consumers to purchase, manage, and file claims for loan, health, and so on, but also by leveraging AI and data analytics, the platform offers personalized pricing and coverage, making the insurance more affordable and especially for underserved groups. Additionally, the IOPA suggested insurance product information document has been added to offer more transparency to the clients, and this was used to the pre-contractual set of documents, which is very important. The claim speed, the quality of service, I think is very key in this. So according to the data provided from this company itself, this initiative has added more than 20% new insured individuals. And this is expected to rise until the year end. So, and they say that through this tool, maybe we have reached also clients that had never interacted with a voluntary or ever with insurance before. So looking ahead, our goal as regulator is to support the digital developments in the insurance sector and the insurance ecosystem, but also our vision is to strongly support them so that they develop in a sustainable way, protecting consumer and not affecting trust, which is very important.
I mean, this really, to me, I think you could talk about how technology is driving the emerging markets all day. I mean, this is excellent. I mean, I want to switch topics a little bit just to kind of go to, market distribution and product design. Ekhosuehi, how are insurers in emerging markets designing products to be both affordable and relevant, especially for folks that may not believe they could actually access insurance products?
So I think that's a really great question, and I think it's really foundational to the work that the Insurance Development Forum has been doing itself. And I know that there's been a lot of talk about technology, but one of the things I've been reflecting on recently is, beyond just, okay, yes, products, etc., there's also, I think, some innovation that's required around process, right? Around partnerships that are required to deliver the solutions that are needed in this context. Again, when you reflect on the challenge, which is low insurance penetration, affordability, etc., there is this question of how do we support people in better understanding the risks that they're dealing with, if it's flood risk, if it's drought risk, whatever the case might be. And I'll give you a very startling sort of discovery that we as the Insurance Development Forum have sort of encountered, which is that over the last 32 years that the United Nations has been putting out this report on Human Development Index and tracking the progress that we're making on health, education, etc., that report had never made reference to insurance in its 30-year history. Never mentioned insurance. And so for us, that's a fundamental gap in terms of entities and institutions that engage directly with policymakers. How are they seeing the value of insurance in the real significant challenges that they are encountering in terms of managing the countries that they exist in? So from the IDF's perspective, there are a number of ways in which we've sought to tackle this, which is creation of a program where we can support these countries, these communities, etc., in better understanding their risks, because we see that as foundational. And there are a number of programs that we've launched with partners, with the World Bank and others that really support countries in terms of deepening their risk understanding and risk analytics capabilities. One thing to say, you have data, but how are you using that data to make decisions? The second, again, goes to a point that I raised earlier in terms of partnerships and innovation around not simply products, but process. We launched a partnership with the United Nations Development Program to engage 20 countries by 2025 this year on a variety of solutions that those governments were struggling with. For example, in Peru, floods of 2018, huge impact on infrastructure, on schools. The government's desire there was, how can we design an insurance solution for these public schools? But it was not just about insurance, it's how can we use that information to inform improving the quality of that infrastructure. So what we are seeing is clients that are not just simply wanting, here is a product off the shelf, but can you walk that risk journey with us to make that case of where insurance is relevant, where it isn't, beyond just the transaction. And I think that this is a very important point when we talk about building trust, scaling markets, developing relevant solutions. And through that partnership with the UN, we've engaged more than 30 countries. Some of these have started to yield results in terms of governments now starting to place some of these programs on the market. But again, they're complex, they're built on partnerships, they're built on trust, they're built on trying to understand the client and what it is that the client actually needs.
Yeah, I mean, as regulators, that process was what we call sort of financial education, right? Ensuring that everybody knows what they need to purchase to mitigate that risk.
And sometimes, sorry.
Yeah, no, please.
Yeah, and sometimes if you think about, okay, a lot of the conversations that we have with government, it's around flood risk. Flood risk is incredibly complex, right? And they say, okay, we want to look at flood risk in an urban context. But part of the value that the insurance conversation can have is to say, okay, it's complex, right? But there are things that you can do to actually reduce that risk, right? And then we can explore what products look like, if it is a parametric, etc. You know, but I point to this to just flag that increasingly, and particularly in emerging markets, we are seeing clients, if they're governments, etc., that are looking not simply for risk transfer solutions, but I would say almost risk advisory services, right? And I think maybe even in developed markets, there might perhaps be scope to do a little bit more of that.
I mean, financial education is what we do every day. You know, Mimoza, how can financial education be embedded into product design and distribution rather than being treated as a completely separate initiative, which sometimes can happen?
So our forward-looking strategy is designed to empower consumers through practical real-time learning embedded directly into the insurance experience. And here I want to bring an example of this approach, which is an agro-loan insurance product developed for rural borrowers, which combines financial protection with very clear, easy to understand information on coverage, on exclusions, which sometimes is a real problem, yes. With the tiny letters written, yep. Very tiny, and no one reads them. So, and very clear about the claims handled at the point of sale, which is also very important. So, furthermore, our strategy promotes the use of simplified, transparent language in all products, disclosures, and we encourage insurers to leverage digital tools like frequently asked questions in their websites, explainer videos, interactive claim simulators, so to make the insurance concept easy to understand and to make insurance more accessible. Moreover, the intermediaries serve as advisors, and they are required to keep standards for communication and also responsible for the product literacy. So our position is staying for, as regulatory body for consumer protection, inclusive education, and also to embed education into the regulatory and supervisory approach, which is not always easy, but now with the digital tools, and I think there is more space, there is more room to go in this direction.
That makes a lot of sense. Suzette, kind of building off of that again, can you describe for us some of the institutional arrangements for fintech regulation, and really in terms of, I think, kind of what Mimoza was saying, which is regarding supervisory monitoring.
Sure, happy to do so. So just to say that what I'm telling you today in short comes from a fintech note that we published around supervisory monitoring of fintech in 2023. Now, I guess it depends on the maturity level and the speed at which fintech is adopted in any market, as well as the maturity level of the supervisory authority as to what approach is adopted. Now, I would like to touch on 3 of them, but just to say that I think as any supervisor, your end game or your aim should be to incorporate the monitoring of fintech and its risk and opportunities and challenges as part of your day-to-day supervision and regulatory framework. Because, I mean, in your day-to-day supervision, you've got direct access to your entities. You can quickly raise a question, get feedback. Plus, as a supervisor and participating in supervisory colleges, you also have your global peers that you can connect with. But that's not always possible because if it's part of your day-to-day supervision, your supervisors needs to be trained to understand fintech and the risks and the things around it. They need to keep up to date with the developments. Supervisors, having been a supervisor myself, do have conflicting priorities. So you might just not get to everything, or there's other important things to attend to. And with fintech developments, it might be a case that there's an opportunity for regulatory arbitrage because it doesn't fit perfectly within the insurance supervision, it doesn't fit in with the banking supervisors, and then it just falls through the cracks. But the end game should still be to do it as part of your day-to-day. Now, other options that we do explore in our note is innovation hubs. That's one monitoring tool, and that in particular can be used when fintech development in the market is very quick and it's not really well understood. So that gives the supervisors an ability to, in an environment, monitor what's going on, increase its understanding of the innovation or the technology that's been introduced, and also give feedback to the companies or the firms that's participating in the innovation hub. But it is a costly exercise. A fintech or innovation hub needs structure, so it needs to have a feasibility study, objectives, and it needs to have the buy-in of everybody in the organization to be able to operate. And having an innovation hub does mean that you're taking away some of your resources to attend to that. The other one is sandboxes, and a very popular monitoring tool used in emerging markets. About 60% of the sandboxes that's there in the world is in emerging markets in itself. Now, again, sandboxes is a useful tool to allow firms to test things or to test an idea in an environment that's controlled with real consumers and see what's the outcome. But it's a costly exercise. It is really staff or labor intensive or resource intensive, and you're putting everything to it for just a few number of firms that's participating in that sandbox. And you do have different models. For example, in Thailand, the banking regulator's got its own sandbox, the securities regulator's got its own, and the insurance regulator's got its own sandbox. And, depending on what product you are offering, or you go to that regulator. In Hong Kong, each regulator there also got its own sandbox, but it's got a single point of entry through the Hong Kong Monetary Authority. And sorry for using, again, my home country as an example, but in the sandbox that's hosted by the central bank is staffed by staff from the central bank as well as staff from the Conduct Authority. But it's got an intergovernmental working group that oversees all the activities within the sandbox. And that working group includes the Prudential Supervisor, the Market Conduct Supervisor, the Central Bank, the Revenue Services, the Competition Commission, the credit regulator, I'm forgetting somebody. Oh, the Financial Intelligence Center, the AML/CFT supervisors that oversees these activities. Now, it covers everything, but it takes very long to get an idea through the process because everybody has to give an input. So that's sort of the main ones. I mean, there's tech sprints, but that's not really advisable or a good solution for new products.
No, that makes a lot of sense. And I think, as we kind of talk about innovation hubs and sandboxes, and I think I would like to open this question up for all three panelists. And maybe starting with you again, Suzette, just given kind of where you left off. What role should regulators play in fostering innovation, specifically without compromising consumer privacy and protection?
So, insurance regulators, I think, have a very important role. So to encourage innovation, but at the same time, also having an eye and focus on consumer protection. So important, first of all, is to have clear rules for digital innovations. The companies are more likely to invest in new technologies if they are aware and they know very well the legal landscape. Essential is also the use of risk-based supervision, the proportionate regulation from the side of the regulator. In terms of consumer protection, I would say another important line is also the data, so how it has been used, how it has been collected, how it has been stored, similar to GDPR in the EU or to Consumer Privacy Act in California. So regulators should provide clear guidelines on that, so how companies should treat and handle the data. Regulatory sandboxes are also a very useful tool, as Suzette also mentioned. This creates an opportunity for the market operators so to test and to try new innovative products, but under the regulatory body supervision. So in Albania, we do not have yet any experience on sandboxes due to the lack of the legal framework for that, but they are used successfully in other jurisdictions. So in terms of consumer protection, we put emphasis on consumer education, insurance literacy, to raise consumer awareness, and we have implemented several digital initiatives, like a complaint portal for the public, for the individuals, so they can digitally submit their complaints, a personal injury claims calculator for MTPL, online verification tools for insurance policy, and also the claims history, and a register of licensed insurance intermediaries, so to be sure that you are working with a licensed intermediary. Furthermore, we also offer trainings in collaboration with the Association of Insurers in the country for the professionals that operate in the insurance market. Important is also the technical expertise for regulators. For that, we are collaborating, and I would say that this is very crucial. So the collaborations with the peer regulators, but also with the international bodies. So, in short, regulators are not just an enforcement body, but also responsible to create an environment that protects consumer and enable responsible innovation.
So just real quick, and not to put you on the spot, there's a question in the Slido that sort of asks, what can U.S. regulators learn from emerging markets from our regulator colleagues? And as a regulator colleague, is there anything you think that we could learn from your experience?
I think it's very important to have a strong collaboration with other regulators. In our case, we have several MOUs signed, not only with the neighbor countries, but also with other countries. We are part of the IIS MMOU, and we receive often requests from other regulators. We meet on a regular basis, also at regional levels, the Central and Eastern South European, Central, Southeast, Central East and Southeastern European countries, and this is very useful. For one other reasons, because the countries in the Western Balkans have similar features in the market in terms of business model and in terms of size. And this is a good opportunity to collaborate together and to learn from each other.
That's excellent. And then going back to the Slido for Ekhosuehi, do you think supervisors have a role in encouraging governments to improve infrastructure and legal systems? And then after that, does industry actually have a role in your opinion?
Yes and yes. Yeah, I think for me it's important. That's part of, I always think of insurance as, yes, there's a financial dimension to it, but there is a governance dimension to it, right? In terms of how you understand risk, discipline of process, the discipline of reliability in terms of financing when you need it. And that comes with an entire broad ecosystem. So for me, it is obvious that there is a role for supervisors to play in terms of making that connection to improving infrastructure, legal systems, etc. I similarly also think that there is a role for industry. We've heard a lot about, consumer education and all of that. There's a role for the entire ecosystem to do a better job, right, with consumers in terms of understanding their risks, not to keep harping on this point, but actually the value of insurance. So you will not get me saying no to any of those questions.
I mean, just sticking with that a little bit, how are regulators balancing the needs for innovation and financial stability in environments where really trust in insurance may still be growing?
Yeah, I think that's also the trust in insurance issue. I think it is not only a developing country problem, it's a developed, and I mean earlier today in the panels that we had, that also came out. So it's something that I think needs to be addressed by the entire industry. But how do you address or how do you build trust? I tend to believe it is reaching out beyond the silos that we exist in to engage with other sectors. As I mentioned earlier, part of the work that we do within the Insurance Development Forum is working with entities like the World Bank, like the United Nations, like the donor governments who finance significant programs in these countries, have direct conversations with leaders in these countries to really try to make the case in terms of what the insurance value proposition is. I also think trust comes with doing, which means that you deliver on your promise, right? So that goes also to the products that we design, the products actually matching the expectations, again, of the clients that you serve, but also delivering on that promise. And drawing on my own personal experiences, because I've been involved in establishing a number of regional risk pools, sometimes it goes great. And when it goes great, it's a fantastic thing, right? An event happens. In some ways, it's a terrible thing because the loss is significant. But when the client receives the payout, there is some comfort in terms of the trust around the mechanism. But then when it doesn't deliver, right, and I've known of programs, or I've been in programs where, we've established a parametric or used a parametric solution, a basis risk event has occurred, how then do you respond? And I think in those moments, it is particularly important to show up with the clients to explain what the limitations, what the challenges are. And often what I find is that the counterpart, yes, there is frustration because they want some kind of compensation, but oftentimes they're also interested in how do you improve, right? And I think that we have to get comfortable in terms of, building trust is better products, it's delivering on the promise, it is building the systems, and it is a complex thing, but it's also a long-term journey. It's public education, all sorts of things.
I mean, trust is paramount in this space completely. Suzette, you're kind of balancing that a little bit. What are some of the emerging regulatory considerations with big tech in the financial services sphere?
Yeah, so, just some ideas. I guess where big tech is prevalent in the market, and we particularly see in emerging markets that big tech sort of covers a wide range and wider range of financial services than maybe in advanced markets, from banking, lending, payments, insurance, securities, etc. Sorry, I'm interrupting myself, but I mean, big tech can have a lot of opportunity, and it can quickly scale up and address the issue of financial inclusion and beef up the competition in the short term. But in the long term, it might not be so good, because it might create monopolies, which you don't want either. So, so from a supervisory perspective and a regulatory perspective, I guess, jurisdictions need to critically look at the existing regulatory framework and see if it caters for these, type of entities entering the market. So whether they need to adopt the existing ones or actually cater for or develop new ones, particularly for that type of entities entering in the market. Now, there's ways of doing it, and I know changing regulations not always a quick fix. But, thinking of having a sort of a hybrid approach, one looking at entity-based regulations, so the prudential side, where you would look at the group of entities those big tech operations are part of, and either do a group supervision as a subgroup, but then also looking at activity-based regulation, which is more the market conduct side. Now, just to say, whatever you develop, it's very important that there's cooperation and coordination locally in the jurisdiction between all the regulators, but also the non-financial regulators, but also that there's a close cooperation and coordination cross-border as these entities are operating wider.
And given your experience in looking at the Slido a little bit, how can the IIS better assist emerging market members?
Yeah, I think you should ask the IIS vice chair that's representing the emerging markets.
Maybe I can say something for this question. We, as a regulator, covering also insurance market, we have had the peer assessment from the IIS, which was finalized in 2023, with a very high level of alignment, and I'm very proud of the conclusions of that. And I think this was one of the best exercises for the authority, for our legal framework, regulatory framework, for our institutional capacities, and following the recommendations from this report, we have been able to draft the legal changes and to finalize them, and now they are for approval in Parliament. So here am I, and I can bring a touchable...
The tangible, and that's exactly the answer to that question.
Justin, may I answer the question?
No, I was fine with that answer, so that's up to you.
Then just to say that, the IIS has shifted its focus from standard development to implementation support, and has done a few things which really helps emerging markets. And to give you an example, there's certain forums that's been established, the Financial Inclusion Forum or the Risk-Based Solvency Implementation Forum, which allows one to provide guidance to its EMD members in those particular areas, and guidance materials being developed. But it also gives a peer exchange platform where not only emerging markets are sharing views, and in particular in advanced economies or advanced markets are being invited to share their views as well. And the IIS is also developing a number of application papers that can assist supervisors in emerging markets in developing their own supervisory approaches.
Excellent. No, as we kind of begin to wrap up with a couple minutes left, I just have one sort of last question for the group. What's one common misconception you think global insurers might have about emerging markets that may be preventing them from opportunities for growth in these markets? And I'll start with Ekhosuehi.
Okay, thank you. In defense of the IAIS, doing some great work. So I think that you said one, but I'll give you multiple. Oftentimes I hear too risky or too poor to insure profitably, the need incentives for innovation or need charity models. I think that this is a significant myth in terms of these markets. Yes, they are complex markets, but they are real opportunities. What I think is clever, what is needed is clever distribution, contextual products, and I keep referencing this point, but also inclusive underwriting. And I think that we are seeing some progress within that space, but there's a lot that can be done. If you think about, okay, we talk about, okay, there's no information, but the reality is that many of these markets, we talked about technology, how technology is being leveraged to inform parametric products. So I would just say it's complex, but these markets also represent the next billion customers, right? Yep. So we have to think about, if we want to reach those customers, we have to be prepared to tackle the problems or the challenges that exist in getting there.
Excellent. Mimoza.
So one common misconception that global insurers might have about emerging markets is that these markets, sometimes, for some of them, they are too small, emerging markets are too risky, and too underdeveloped to justify serious investment. They sometimes underestimate the diversity within the emerging markets, and assuming they can replicate products or distribution models across regions, but in this case, the one-size-fits-all is not valid. And coming back to the low penetration challenge, so the low penetration, I think, signals demand on insurance and a need to close protection gaps. I think the emerging markets may be the place where the first-time insurance buyers will come from in the next decade. So many of these countries have young population, increasing use of smartphones, more interest in financial protection, offering untapped opportunities for global insurers.
Excellent. And as Director Dunning stands and looks, Suzette, you have the last word.
What they said.
Perfect. Well, I mean, real quick, I want everybody.
I want just to add. Thanks again for the invite, and I would like to take this opportunity to warmly invite you all to Albania in November this year, 2025, where the IIS annual conference will be held in my beautiful city, Tirana. As the host regulators, we are committed to ensuring you to have a memorable and enjoyable experience in our beautiful country. Thank you.
Well, thank you very much.